Hey guys, how you doing? Hey, in this video, we're going to compare the East Bay real estate market to the stock market. And we're going to answer that question, which is the better investment? But before we get started with that, couple of things for you. First of all, if you guys are looking to buy or sell a home, look around the screen. My number is going to pop up somewhere up there. Love the opportunity to talk with you. Also, it should be a QR code somewhere around. Scan on that QR code, leave your information behind, and we'll reach out to you. Also, if you're somebody who stays updated regarding the real estate market, again, look around the screen, just a subscribe button, subscribe to our channel, and finally comment below. Let us know how we're doing. Let us know if you have any questions. Look forward to talking with you. Hey, so within this video, we're going to compare the East Bay real estate market to the stock market. Now, a couple important things, guys. To really get the answers to these questions, you got to talk to your licensed financial advisors. I am not a licensed financial advisor. I'm going to give you some general ideas of how things will work. But to get specific to you and somebody who can really discuss and get in depth of what's best for you, that's the direction you need to go, is have that conversation with your licensed financial advisor. But let's start talking about the East Bay real estate market versus the stock market, okay? So what we want to do is kind of get this first slide up here and things. And within this slide here, and of course, you know, slides and numbers pop up, guys. You know, it's pretty common with my videos, okay? In this slide, what we're doing is we're looking at what the average price of a home was back in 2004. And so we're looking in 2004, and we'll focus on the city of Concord. I just kind of selected the city of Concord simply because I lived here, or I live here now. And we're looking at a house. It's $498,403, and that was the average price of a home back in 2004. Now let's make the assumption that we bought that house at that price, and we put a down payment of $100,000. Now our cash out at that point in time, or what we're investing into that home, is $100,000. Now, 20 years from then, in 2024, the average price is $885,000 and some change. And so that's what our home's worth now. Now, let's assume we're selling that home and we're selling it for $885,000. The loan, the amount that we owe on that home is going to be approximately $214,000. And remember, our initial investment was $100,000. Now, we're going to walk away from this transaction after selling it with $571,000. You know, now there's other expenses we got to consider. There's selling fees and so forth. You know, I'm not looking at that right now. You know, there's tax benefits and so forth. Maybe capital gains we have to pay. I'm not considering all that. Just looking at straight numbers right now. And so for that initial investment of $100,000, we've got it's about a 112% return, actually a little less than 512% return on investment. So we invested $100,000 back in 2004, and in 2024 it's now $571,000. Okay, so let's run another scenario now. Okay. In this scenario, instead of buying the home, we actually are investing $110,000 in the stock market. Now, experts will tell us that the stock market has grown historically at about a 10% annual pace. And if we look at that, in 20 years, in 2024, that $100,000 would actually be $732,000. We subtract out that original $100,000, so our return on investment is about $632,000. So in this scenario, guys, if we look at but we had by buying a home after selling it after 20 years, we walk away with $571,000. Now, if we were to take that $100,000 and simply invest it in the stock market, we're getting a better return. Now, if you notice on both of these, I actually put a return on investment before housing. Now, one of the things that's really important to consider, you're going to be paying for a house. You got to rent, most of us are going to be paying for a house. If we don't own a home, we're renting somewhere. If we do own a home, we do have an expense that we're paying. I'm going to account for that in just a second, okay? Yeah, if you go back to that first slide, we could flip back up there. And if you look, our monthly payments on that first slide, when we bought the home, was $2,300. This is our principal and interest payments, okay? Let's pop our third slide up here. Now, let's consider this scenario. Let's say instead of paying our mortgage every month, we take that $2,348 and we invest it in the stock market at 10%. Again, that money after 20 years is actually going to be worth about 1.783 million. So let's pop our next slide up. And so we're comparing these numbers. Buying a home, you sell it in 20 years, you're walking away with about $571,000. If you take that $100,000 invested in the stock market, you're walking away with about $632,000. And if you were to take your monthly payments, not the original $100,000, but just monthly payments that would have gone to a mortgage payment and invested monthly, you're actually walking away with almost $1.8 million. So again, it comes back, what is the best investment? Let's go on and look at a couple other scenarios here. Okay, guys, let's take a look at this fifth slide. Now, this is an interesting slide. We got 3 columns here. Let's take a look at the red column, and this is our cost of housing. In the original scenario where we bought a home, we're paying for this home on a monthly basis. Now, when we sell the home, we're getting a lot of that money back, because every month when we make a payment on that home, we shrink the amount that we owe on that home. Our loan, we're paying it down every month. And when we sell that home, if we at least sell it for what we bought it for, we're getting that money back. And typically we're selling it for much more than we bought it for. So we're getting that money back and then some, But there is one thing that we've got to account for. Our expense of living is the interest, And the interest that we pay on that every month. Now, the interest that we started paying in 2004 in 2024, it's actually worth about $1.3 million. Now, one of the things we're accounting for in this is the time value of money. Now, what the time value of money means is that money decreases in value or increases in value based on time. So if we've got an interest rate of 10%, which would be what the stock market would be paying us, that money, and that's what we're doing with this one. That's how we're coming up with 1.3 million, is we're considering that interest that we pay every month. We're considering that if we were to put that money in the stock market, it would be a 10% return, or approximately a 10% return. And that's how we come up with $1.3 million. And that's the time value of money. So that's the cost of the interest that we're investing every month, $1.3 million. If we were to sell this home in 2024 and we make $571,000, when we consider interest, consider time value of money, we're actually losing $736,000 by owning a home. Now let's consider the other scenario. We take that $100,000 and we invest it. But remember, when we're investing that money, we now got to pay for our home. So we've got to rent. And in this scenario, we're considering $2,000 per month rent that we're paying each month. Now, obviously, rent's going to go up, it's going to go down, and so forth. Well, probably always go up, But if we consider time value of money in 20 years, renting at $2,000 per month, it's going to be worth about 1.5 million. So now, by investing that $100,000, we would have earned 632. But because we have to rent, and the rent cost us about $1.5 million, if we consider time value of money, we're actually losing out on about $898,000, almost $900,000 by renting and investing that $100,000. Now, the final scenario is where we're renting for $2,000 per month and we're taking $2,300, which would have been a mortgage payment, and we're investing that on a monthly basis. And that's the best scenario, because we actually end up earning about $251,000 in that case. So again, we always hear about buying a home, such a great investment and so forth. In this scenario, we're walking away, and we're actually, if you look at that top one, we're actually losing money. But in the same case, if we're renting a property, we're losing even more money over time. Let's pop the next slide up here, Now, in this particular slide, we're doing something. We're actually considering that we've bought that home, and we're paying for that home on a monthly basis. We're paying our mortgage payments and so forth. 20 years later, we end up losing $736,000. But during that 20-year period of time, we're also we inherited $100,000 and we put it in the bank. Also, we invested in our 401k. $2,300 per month over a 20-year period of time. And if we look at that, by having a mortgage and not having to pay rent, we actually end up earning almost $1.68 million by, again, buying a home, paying our mortgage, also putting any money that we've got into the bank. We assumed $100,000 in 2004, and then finally investing our money on a monthly basis, our spare cash on a regular basis, and on a 401k or some deferred comp type instrument, and we end up with $1.68 million after 20 years. So that's something to consider. That's a direction we're looking at going. We're looking at buying a home. You've got assets and money coming back. Remember, if we're renting, it would have cost us almost $900,000 over a 20-year period of time. In this case, we're buying a home. It's only costing us about $700,000 when we start talking about the interest itself and things. Okay, guys, we're going to pop the last slide up here, and let's take a look at this. In this slide, we're going to address the myth of not a myth, but the idea of paying more on your mortgage. Okay, on a monthly basis. So let's take a look at that. Okay. The first, we're popping the slide up here, and the first line we see is we bought the home in 2004. We sold it in 2024. We're just paying our regular mortgage payment each month, and you see we end up actually taking a loss when we consider interest and the time value of money. We take a loss of about $736,000. Now, in the next scenario down, we're actually paying $100,000 more. Correction, $100 per month more each month, and people tell you just what a great investment that is and so forth, and actually when we look at time value of money, it actually, by paying $100 more per month, we end up only costing about $1.264 million, and it ends up only costing us about $648,000 over a 20-year period of time to buy that home. Also, if we take a look and if we do $200 per month on a monthly basis, additional on our mortgage payment, we end up walking away, and it's only costing us about $590,000. So by paying some additional amounts monthly, we do end up creating some savings for you. Now, here is probably the biggest advantage to buying a home. If we look at it, we consider time value of money, we look at the interest and so forth. I mean, I haven't even touched on taxes or anything like that. There's a tax savings that's created, and I didn't address that, but just wanted you guys to see that over a long-term period of time, it does cost you to own a home. But if you start comparing it to rentals, you end up really kind of doing much better by buying a home. And here's the thing: buying a home is a forced savings account. I used the scenario of putting $2,300 into an investment every month. How many of us are actually going to do that? Whereas if we own a home, we're actually making our monthly payments. It's required that we make our monthly payments on every month. And by doing that, we're creating a savings account. We're building equity in our home. And that's the big advantage. And creating equity in that house is something we can sell, an asset that we can sell down the road and get a return on investment. If you're renting, you're not going to be able to sell that asset and stuff. That's somebody else. You walk away, you lose everything you have invested into that home. Now, with me doing these numbers with time value of money and so forth, a lot of people are probably going to go, well, Ron, what if I'm renting out the home and so forth? Well, that's a question for another video, another time. So guys, remember, you buy a home, you're going to pay interest on it. It does end up in the loss, but you're going to have to pay for living. You're going to have to pay to find a place to live and so forth. Anyway, so by owning a home, paying a mortgage every month, you're creating a savings account for yourself. Also, by taking money that you've ran into and earned in some way or form, investing that money in a one-time bulk investment, letting it grow over a long period of time, will get you a significant return on investment. Also, by investing on a monthly basis, you're going to have a significant investment or return on investment as well. And so by doing that over a longer period of time, creates wealth for you. Okay. Guys, again, if you have any questions, comment below. Let us know. Also, if you're looking to buy or sell a home, guys, again, my number is going to be somewhere around the screen. Call me. Love the opportunity to talk with you. And also, look for that QR code. Leave your information behind. Scan it. Leave your information behind. We'll definitely reach out to you. Okay. And join our channel. If you're somebody who stays updated with real estate market, you'll see that subscribe button. Click on it. Okay. Hey guys, have a great weekend. I'll talk to you soon. Bye bye now.